When a name like Eric Jackson starts talking about Beyond Meat, people pay attention. Jackson isn't just another trader on X, he's a respected hedge fund manager and longtime market commentator with a strong following among both professionals and retail investors. So when he posted that his inbox was flooded with messages urging him to take a position in Beyond Meat, it said a lot about what's happening right now. Beyond Meat has suddenly become the center of a speculative storm, a perfect mix of retail enthusiasm, social media momentum, and extreme short interest. The stock closed Friday at around 65 cents after a 24% bounce, but that pop barely scratches the surface of what's been an incredible collapse. A month ago, it was near $3. Then came the dilution bomb, a massive debt exchange that created more than 326 million new shares. The stock plunged almost 50% in a single session and then kept falling. And yet, despite all that carnage, Beyond Meat is everywhere again. Reddit boards, X threads, YouTube comments, the chatter is non-stop. Traders are dissecting short interest data, plotting charts, and speculating about a Monday squeeze. Eric Jackson's tweet, where he said he's being flooded with requests to buy the stock, might have unintentionally become the biggest catalyst of all. Because when someone like him even acknowledges that kind of retail pressure, it validates the idea that something real is happening at the social sentiment level. Let's take a step back. Beyond Meat is not a healthy company right now. It's a distressed brand trying to stay afloat in a shrinking market. Revenue in the second quarter dropped nearly 20% year-over-year. Margins are barely in the double digits. Cash is drying up, and debt remains heavy. The debt-for-equity swap gave them more time, but it came at a devastating cost to existing shareholders. Fundamentally, this is a company fighting for survival, not preparing for growth. So why is everyone talking about it again? The answer lies in the power of social momentum, and how it can take a broken company and turn it into a trading phenomenon. Right now, Beyond Meat has one of the highest short interests on the market, roughly 62% of its float. That means more than half of all freely traded shares are held by traders betting against it. Combine that with a market cap around $250 million and a share price under $1, and you've got Tinder waiting for a spark. The spark, this time, might be psychological rather than fundamental. Jackson's tweet hit a nerve because it confirmed what retail traders have been feeling all week, that the buzz is spreading beyond the usual echo chambers. When a hedge fund manager with hundreds of thousands of followers says he's being spammed about a penny stock, it tells the market that retail energy has reached a critical mass. Even if Jackson himself never buys a single share, the fact that he's publicly noticing it becomes its own kind of catalyst. Now, let's be honest. Eric Jackson is not the kind of investor who's going to take a massive long-term position in Beyond Meat for his fund. He's known for looking at tech, innovation, and growth narratives backed by real earnings potential. Beyond Meat, at this point, doesn't fit that mold. It's heavily dilutive, unprofitable, and structurally challenged in its category. So the odds of Jackson holding this as a core portfolio asset are extremely low. But that's not the point. The point is visibility. When he speaks, or even jokes about a ticker, millions of eyeballs follow. That creates what we might call the influence echo. His audience includes traders, journalists, quant bots, and algorithmic feeds that pick up on social sentiment. Once his comments started circulating, the chatter spread beyond retail. Even traders who had written the stock off suddenly started watching it again, not because they believed in the company, but because they could see where the flow was moving. That's the essence of a potential short squeeze. It's not about fundamentals improving, it's about perception changing faster than shorts can react. When you have 60+% of the float shorted, and social sentiment starts surging, the equation changes. If the stock starts moving up even modestly, short sellers can be forced to cover, creating upward momentum that feeds on itself. The lower the price, the more violent those percentage moves can appear. At the same time, we have to keep perspective. For a true short squeeze to take off and sustain, you usually need a catalyst that forces shorts to second-guess their conviction, something beyond social chatter alone. In the case of Beyond Meat, there's no earnings report next week, no product breakthrough, and no new capital infusion announced. So if a squeeze happens, it will likely be purely technical, a reflexive move driven by positioning rather than substance. Those kinds of rallies can be breathtaking, but they can also evaporate just as fast. That's what makes this setup so intriguing. It's not really about whether Beyond Meat deserves to rise, it's about whether momentum itself can overpower logic, even for a short time. Retail traders are looking at the math and seeing a powder keg. Hedge fund managers are watching retail sentiment spike and wondering if they should front-run the momentum. And influencers like Eric Jackson sit right in the middle, a bridge between two worlds. His tweet doesn't change the fundamentals, but it absolutely changes awareness. It's also worth noting that Jackson has a track record of engaging with retail-driven stories. He was one of the few institutional voices who openly acknowledged the significance of the GameStop movement back in 2021. He didn't buy into the hype then either, but he respected the mechanics, the idea that collective behavior can become a market force of its own. So when he jokes about being flooded with BYND requests, that's not just sarcasm. It's recognition. It's him signaling that he knows something unusual is happening. And that brings us to the psychology of this moment. Retail traders don't need institutional validation to act, but they do crave acknowledgement. When a big voice says, "I see what you're doing," it energizes the movement. It creates a sense of legitimacy, the feeling that this isn't just another random pump attempt. It becomes a narrative, retail versus shorts, social capital versus financial capital, the comeback of a fallen meme. Whether that narrative holds up depends on what happens next week. If Beyond Meat opens Monday with heavy volume and price momentum, even a small uptick could trigger short covering. Remember, many of these short positions are algorithmic. They respond to volatility and liquidity conditions, not moral conviction. So a sudden volume spike could set off a chain reaction of covering, propelling the stock upward for a day or two. That's the dream scenario for traders hoping to catch a squeeze. But the risk is equally clear. Once that momentum fades, gravity returns fast. The fundamentals haven't improved. The dilution remains massive. The company is still unprofitable and burning cash. And any temporary pop won't fix that. The danger is that some retail traders might see a squeeze as the start of a long-term recovery, when in reality, it's just a brief technical event. So how should a rational trader think about it? With eyes wide open. Beyond Meat right now is a volatility play, not a value play. It's a chess match between short sellers who think they've already won and retail traders trying to force them to flinch. Eric Jackson's involvement, even if it's just a tweet, throws gasoline on that dynamic by amplifying visibility. But the smart money will treat this as what it is, a high-risk, high-reward trade that could explode in either direction. If you're watching Beyond Meat next week, focus on flow and volume. If the stock sees an early morning surge with social sentiment still trending, that's when squeezes can catch momentum. But just as important, have an exit plan. These setups are reflexive, they can give big returns, but only if you know when to step aside. The worst mistake in these moments is to confuse a social movement for a business turnaround. In a way, this whole episode says as much about the market psychology as it does about Beyond Meat itself. A company that's effectively in distress can still capture attention, dominate social feeds, and potentially move double digits in a day, all because people believe they can will a squeeze into existence. That belief is powerful, but it's also fleeting. Eric Jackson's tweet is the signal that the narrative has spilled over from niche retail chatter into mainstream awareness. It doesn't mean he's buying. It doesn't mean the company is saved. But it does mean that everyone's watching, and that alone can move a stock in the short term. If a squeeze happens next week, it'll probably be sharp, fast, and emotional. If it doesn't, retail enthusiasm may fade just as quickly. Either way, Beyond Meat has once again become the story, not because of what it sells, but because of what it represents. Hope, defiance, speculation, and the enduring power of crowd psychology in modern markets. So as Monday approaches, one thing's certain, Beyond Meat isn't being ignored anymore. It's back in the conversation, back on watch lists, and for better or worse, back in the crosshairs of both retail traders and hedge funds. Whether that leads to a real squeeze or just another head fake remains to be seen. But the attention alone proves a point. Even a struggling company can ignite when sentiment, social momentum, and timing collide.